We saw that there are three important methods of valuing goodwill, of which we have already discussed the average profit method of valuing goodwill and the super profit method of valuing goodwill. Now, let us discuss the calculation of goodwill by the capitalization method. In this method, goodwill is calculated on the basis of capitalized value of profits. The profits are capitalized on the basis of normal rate of return, and the net investment in the business is deducted therefrom to arrive at the value of goodwill. Goodwill under this method can be calculated in two ways, that is, by capitalization of average profits or by capitalization of super profits. So let's see each of these calculations in detail. First, let us see how to calculate the goodwill by capitalization of average profits method. Basically, under this method, the average profit is calculated as we have already learnt in the average profits method. Such average profit is capitalized on the basis of normal return, and the capital employed in the business is calculated and deducted from such capitalized value of average profits. So, step 1 is to calculate the average profits on the basis of performance of the past few years. Then, such average profits are capitalized by using the formula of average profits into 100 divided by the normal rate of return. Now, what is the meaning of this capitalized value of average profits? This means the amount of normal capital required in order to earn such average profit by the business. Next, we see the actual capital employed. Now, we all know the structure of balance sheet, right? On one hand, we have all the assets, and on the other hand, we have the capital and the liabilities. So, in order to calculate the capital employed, we do assets minus the liabilities. This is the actual capital employed. Now, in order to calculate the goodwill, we take the capitalized value of average profits, that is the normal capital, and we deduct the actual capital employed from it. This means that any other business similar to our business would require more capital in order to earn the same average profit which we are earning by using a lesser actual capital. That saving in the capital is our goodwill calculated by capitalizing the average profit. Let's take an example here. The profits of a firm are 15,000, 20,000 and 25,000 for the past 3 years. The normal rate of return for the firm's business is 10% and the capital employed by the firm is 1 lakh. Now here the average profit is 15,000 plus 20,000 plus 25,000, that is 60,000, divided by 3, that is 20,000. The capitalized value of average profit is 20,000 into 100 divided by 10, that is the normal rate of return, is equal to 2 lakhs. The goodwill is calculated as 2 lakhs minus 1 lakh, that is rupees 1 lakh. Now let us see how to calculate the goodwill by capitalization of super profits method. Here, first we calculate the actual capital employed by the firm, which, as we already discussed, is total assets minus the outside liabilities. Then, on this actual capital, calculate the normal profit by applying normal rate of return to such capital employed. After this, calculate the average profits for the specified number of previous years. Once the normal profit and average profit are established, then calculate the super profit as average profit minus the normal profit. This super profit indicates that the actual average profit earned by the business exceeds the normal profit that can be earned by similar business for similar amount of capital employed. The goodwill is then calculated by applying the formula super profits into 100 divided by normal rate of return. Let's take an example here. The profits for the past 3 years are 15,000, 20,000 and 25,000 and the normal rate of return is 10%, whereas the capital employed is 1 lakh. Now, first the normal profits on the capital employed works out as 1 lakh into 10%. That is 10,000. That is the normal profit. The average profits for the previous years is 15,000 plus 20,000 plus 25,000, that is 60,000, divided by 3, that is 20,000. Now the super profit here is 20,000 minus this 10,000, that is 10,000 is the super profit. And the goodwill is calculated as 10,000 into 100 divided by 10, which is the normal rate of return. So the goodwill is 1 lakh. So with this, we have discussed all the methods of calculation of goodwill. That is the average profit method, the super profits method, as well as the capitalization methods.